Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 5:30 in New York. It is Monday, 9th day of September 2019, and this is the daily report for gold and silver. Interesting action to start the week off with gold and silver trading lower on the day, and that's in light of the fact that we have fractional weakness in the US dollar providing some headwinds. Nonetheless, we could either go into a correction or this could be a simple consolidation. And on today's report, we are going to detail the pivots and the numbers that we want to look for so that if it continues to drop, it will provide us with a place that if we get confirmation of technical support in that area, that's where we'll get in. But there's an old adage, and that adage is that you buy when the big boys buy and you sell when the big boys sell. And certainly when it comes to gold, the big boys are countries, the central banks of various countries. And one of them that is noteworthy to speak about today is China, because on a monthly basis over the last 9 months, China has added its gold reserves, which are sitting at nearly 100 tons. In fact, they added 5.91 tons of gold last month in August to their reserves. And that's really interesting because we've heard talk about not only the Chinese bank, but global banks, central banks around the world, really increasing part of that gold portfolio or reserves that they carry. And that speaks deep as to where the central banks think their currency is going to head, which is lower, and where gold is going to head, which is higher. With that in mind, let's take a couple look at pricing as well as our current technical studies. So we have seen a continuation of selling in both gold and silver. Platinum and palladium also closed lower on the day, about a decline of $8.40 at 1507.70. You can see that on the screen. But I think what's most interesting is if we take a look at this screen, down here in the lower left-hand corner, what I've added is a monthly chart. And the reason we added a monthly chart is because of the amount of data that can hold. We can see these recent highs that came in at around 1564. What I find unique about this particular area when we compare it to the overall history of gold is that after gold made its historical climb back in 2008 through the middle of 2011, and then it began to oscillate, it really broke into a fairly wide trading range with the top being around 1800. You can see that right here. And the bottom, if I recall, being about 1534, somewhere in that area. That's the series of lows. And so without a question, when we take a look at the big picture, we can see that current pricing is kind of butt up against the bottom of this trading range. And traders, that's exciting because it's the first time we've actually seen this occurrence since the dramatic and multi-year correction. Of course, that multi-year correction took prices from about 1800 and then began to trade in a range-bound manner in which we saw these lows genuinely come in at around 1550, and the highs come in at 1800 before it finally did break, and throughout the remainder until 2015 traded to that low of $1,020. That being said, we are now back in this area because you can see that this particular series of highs that came in over the last couple of months, again, this is a monthly chart, absolutely line up with the lows that we saw during that range-bound period before it actually began to sell off. Now, in terms of our various targets, we'll look at a chart. We are looking at a weekly chart, this of gold futures. We can see for the last 3 weeks we have had a significant sell-off first, and secondly, we see that we definitively found a level of resistance right here at 1561. Now, in terms of where the market could go, it did break through a key level today. That's the 1.382 extension, but we also now have a retracement on this side, and so the real level that we want to look at comes in at around 1490 to 1500. Of course, that is a key psychological level, and it also is the 0.23% retracement right here. I believe that it is possible that if we see further selling, we will definitely see some support come in right in this area. That would satisfy me in terms of a correction, and then I would look for it to break to new highs. We are looking at a daily silver futures candlestick chart. We can see that it definitely traded just above a key level, and the level I'm talking about was the 0.23% retracement at 1946. That is this area right in here. And I did label that former resistance and current support. That is until on the second day. Only took 1 day of not being able to hold that price point, and it broke through. Did I see that as resistance again? And the same goes for what we're looking at here, and that is 1831. Well, that is no longer support. There's absolutely no doubt. That is resistance, and we have to label that appropriately. And I don't see any major support coming in till the 0.50% retracement at 1740. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review, and those are the parameters that we're looking at in terms of price points to re-enter the market from the long side. Have a great day. Bye-bye.